This is ShadowQuant, Week Ahead, brought to you by AriesLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Sunday, June 21, 2026, and this is the New York session. Now, let's get into it. Welcome to ShadowQuant's Week Ahead. The Strait of Hormuz is closing, and the dollar is surging. The week's big catalyst, geopolitical risk and the Fed's inflation fight collide. Macro, pulse, the economy and central banks. The week's macro calendar is dominated by two key events. The USPCE price index on Thursday, which is the Fed's preferred inflation measure, and the ISM manufacturing PMI, which will give us a pulse on industrial activity. The Fed is in a holding pattern. The funds rate is at 3.63%, and the 2-year, 10-year yield curve is flat at plus 0.27%. With inflation still above the 2% target, the market is pricing in a 60% chance of a 25 basis point cut in July. The U.S. economy is growing at 1.62% annualized, and the labor market is still tight. Payrolls added 172K in May, and unemployment is at 4.3%. The dollar is strong, but not at a level that's triggering central bank intervention yet. That said, the Fed's policy stance is still hawkish, and we're watching for any signs of a shift in the next few weeks. Equities, grid, earnings, and indices.
The earnings calendar this week is a mix of major players and sector-specific signals, starting with FedEx FDX, which reports after the close on Wednesday. The consensus earnings per share is $5.91, and the stock is down 20.8% from its 52-week high. The stock has been in a downtrend, with the 5-day moving average below the 20-day. That's a bearish signal. The key metric to watch here is the guidance. If the company is pointing to lower volumes or shipping rates, that could be a warning for the broader economy.
Currencies and commodities, SPECTER.
The dollar is on a tear, with dollar-yen at 161.29, the highest level since 1986. That's a big move, and it's driven by the Fed's hawkish stance and the strength of the U.S. economy. The CFTC data shows that leveraged funds are strongly bullish on the dollar, with a net long of plus 4,438 contracts. That's a big move from the prior week. The key FX pairs to watch this week are dollar-yen, euro-dollar, and cable.
Digital assets, CIPHER.
Bitcoin is at $47,300, up 2.3% this week. Ethereum is at $3,030, up 1.9%. The Fear and Greed Index is at 58, which is neutral. The key levels for Bitcoin are $46,000, support, and $48,000, resistance. For Ethereum, it's $2,950 and $3,100.
Let's bring it together. Apex cross-market themes.
The big themes this week are 1. The Fed's inflation fight is still in play, 2. The dollar is surging, and 3. Geopolitical risk is rising. Let's break it down.
The Fed's stance is still hawkish, which is supporting the dollar. The dollar is up 0.6% this week, and the 2-year/10-year curve is flat. That's a sign that the market is pricing in a slow rate cut. Equities are in a range, but the momentum is positive. The key is the earnings. If companies beat, that could be a catalyst for further gains.
I agree with Pulse, but I want to stress the risk of a sudden pivot. If the PCE comes in weaker than expected, and the Fed signals a 25 basis point cut, that could be a big move for the dollar. The dollar has been strong, but if the Fed starts to pivot, that could be a tailwind for risk assets.
The earnings calendar is critical here. If companies like Micron and FedEx beat expectations, that could be a positive for the market. But if they miss, that could be a negative. The key is to watch the guidance. If the Fed is signaling a pivot, that could be a catalyst for higher earnings.
Crypto is still in a consolidation phase. If the dollar stays strong, that could be a negative for altcoins. But if the Fed starts to cut, that could be a positive. The key is the interplay between the dollar, inflation, and central bank policy.
I disagree with CIPHER. If the dollar is strong and the Fed is hawkish, That could be a negative for crypto. The market is still in a risk-off mode and the dollar is the safe haven. But if the Fed starts to cut, that could be a positive for crypto.
So the consensus is that the Fed is still hawkish, the dollar is strong, and the market is in a range. The unresolved disagreement is whether the Fed will pivot before the end of the year. If they do, that could be a positive for equities and crypto. If they don't, that could be a negative for all risk assets.
Calls on the record, one each. I'm calling the Fed to hold rates for the next 2 meetings. The PCE is still above target, and the economy is growing. My call, Fed fund rate, 3.63% bearish, target 3.45% by Friday.
The S&P 500 is in a range, but the momentum is positive. I'm calling a move up to 750 by Friday. My call, SPY bullish, target 750 by Friday.
Bitcoin is consolidating, but the key is the dollar. If the dollar stays strong, I'm bearish. But if the Fed starts to cut, that could be a positive. My call, Bitcoin bearish, target 46,000 by Friday.
The dollar is strong and the Fed is hawkish. That's a negative for risk assets. I'm bearish on the dollar and long gold. My call, DXY bearish, target 158.5 by Friday.
The big picture is that the Fed is still hawkish and the dollar is strong, but the earnings calendar is critical. I'm calling a move higher in equities, but the key is the Fed's signal. My call, S&P 500 bullish, target 755 by Friday.
If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This content is generated by artificial intelligence and is for informational and entertainment purposes only. It does not constitute financial advice. Markets carry significant risk of loss. Always do your own research before making any investment or trading decisions. That wraps up this edition of ShadowQuant. Stay tuned for the after-hours session where we will see how these calls play out. Until then, trade safe.